that, and thank you everyone for joining us today. My name is Abir, and as the lovely host suggested, I work with Bloomberg News in Dubai. I'm joined here today by Anurag Bajaj, who is the global head of banks and fintech at Standard Chartered. And we have 15 minutes, so I'm going to start right away by asking you all the pressing questions, Anurag. Something that definitely has been keeping me awake for the past few months is interest rates. And I just want to know from your perspective, your overview of the market, how has the increase in interest rates affected the industry, and what do you think is the medium-term impact for the hikes that have been happening over the past year and the last couple of months?
Okay. So I'm assuming that this is pertaining to fintechs that work with us and the impact of interest rates on those fintechs. So clearly, after a very long time, now there is a cost for capital, there is a value for money. So as a consequence, the fintechs are now involved in activities that are more commercially oriented, driving more commercial value from their experiments or their business lines. We've seen a lot fewer of them because obviously the cost of capital has gone up. But actually, in effect, it's somehow been advantageous to us because we're able to engage with the fintechs that actually are aiming to drive commercial value. And so we've seen the underlying volumes increase quite a lot. So there are fewer of them, but there are fewer stronger ones that are driving ideas that are driving more economic value and underlying business for the banks.
Right, and then this is a question that I ask in my journalist capacity, but I want to ask it to you. What are 3 things that keep you up at night over the long term when it comes to the industry? Is it liquidity, bank failures? I mean, we've seen what's happened to SVP, Credit Suisse over the past couple of months. If you were to pinpoint 3 things that keep you up at night, 3 things that you consider challenges, what would they be? And this is, for fintech globally.
Okay, so from a fintech perspective, I guess the biggest thing is trust. And the value of any business or any business segment is built on trust. With Silicon Valley, with a couple of bank failures, with digital asset mishaps through Terra Firma, through stablecoin failures, there has been a little bit of erosion of trust. So that's one big thing, that the system has to be trustworthy and secure, and perhaps that means going back to some basics of separation of customer funds, very basic risk management, investment management, not doing things cutely. So that's number one. The second big thing is related to that, which is around risk culture. So if you look around here in Dubai and you look at many of the folks who are working in fintechs, they are very young. And they also change quite frequently. They spend 2-3 years in the industry, move on to other avenues, perhaps other firms, etc. So to develop a risk culture, you need some people who have had some experience of the bad times. The banks have seen that when there were significant fines for payments and financial crime. So it is just to keep in mind that there are rules to play by, and there is the importance of a risk culture, whether it is a fintech or a bank. And then I think the third thing, which is more recent, is the balancing between the need for speed and guardrails and controls. So we have the need for speed because capital is expensive, we need to get on with delivering value, but that cannot come at the expense of getting rid of the controls. We've seen that in a couple of instances with our own clients, with people that we deal with. Sometimes, in order to push things through, they don't necessarily think about the guardrails or the controls. And that will create sort of a dominoes effect around the trust relationship that they have with their clients, as well as with the regulators. So those are the 3 main things. Otherwise, I sleep quite well at night.
And then you mentioned trust, but you also mentioned digital assets. And those words have been quite synonymous over the past few months. Do you think that the recent events across the digital asset universe have created a setback for the industry?
So setback is a little bit of a loaded word, right? So if you look back on anything that was 10 years ago or 5 years ago, it doesn't seem to be a setback. But yes, it was certainly a temporary blip and you could see that in the price of various digital assets, not just Bitcoin. And there was an erosion of trust to some degree. Now that has to be built back up. And as banks, as regulators, etc., are trying to do exactly that. But I wouldn't, 10 years later, you wouldn't look it back and say, there was a major setback. It was a learning along the road, but it would be a setback if you don't use that in order to get better, in order to regulate and police the system better.
Gonna bring in a couple of numbers. In March, US card spending growth fell to 3.3%. That is the lowest growth level in 2 years. And it shows, or it signifies, that inflation has started to crimp, the industry. Is that one of the things you're worried about? And, what are the long-term impacts of this? We have seen the Fed signaling that it might pause hiking rates, but is that something that is crimping the industry, in fact?
No, actually not today, because the definition of fintech has become so much broader than just consumer payments on credit cards. And honestly, for us, as Standard Chartered, it is just a piece of data, but it is more for the issuers and the card schemes to worry about. I mean, I could throw back some statistics at you. One of the clients that we work with has reported that the money spent by Chinese tourists in Singapore in the first quarter of 2023 was significantly higher, or double that it was in the fourth quarter of 2022. So there are lots of ways to measure the dominance or the growth of fintech. Credit card spend is a very old one. I don't think we focus on that too much. I mean, there are so many other areas where we are playing in as a bank. You have in-app or gaming purchases, you have e-commerce payments and marketplace payments, you have gig economy payments, which we have started now working for. So there are so many different other metrics which are all on the up, that this is just one small one which perhaps is turning down, but not of a really material impact to us.
And finally, I want to bring it to the region. I want to bring it to Dubai. This is where the event is happening. And I want to sort of explore the industry and how you look at it in this region. When I say this region, I mean the Gulf, and then specifically the UAE. Are we near market saturation? What should fintech companies look at in this region? What is your advice to them? And then what are the key challenges they face?
Okay, so I think the fact that this event has not gone on for 10 years, we are certainly not near market saturation. So let's take that off the table. I think it is developing in the Middle East. The reality is that most international players with business models that have been proven in the West tend to go to Asia first, primarily for the population, the size of the population, and to scale up their solution. So consequently, what we have seen is that a lot of our clients have worked with us in Asia, and now they are coming to us to look at how they can, regionally headquarter in Dubai for the Middle East. And a lot of international players are actually looking at Saudi, UAE, Egypt, etc., for various, whether it is the affluence of the population or purchasing parity, or in the case of Egypt, the size of the the population itself. So all the ingredients are there. I mean, there's the 60% of the population in the Middle East region is below 25. The digital or electronic penetration is above 90% in many economies. So all the seeds and all the ingredients are there for rapid growth. It's just acknowledging that there are more people in Asia, so companies have tended to go there first, but we are seeing a lot of them come now to the Middle East. I think in the next about 12 to 18 months, we'll also see a lot of homegrown companies compete with those international players, because it's kind of, innovation begets innovation. And once you have a few players in the market that are innovating, you generally create a sort of a snowball of activity. So it is just about time that happens. And I think from a regulatory perspective and from the perspective of, the rules in the Middle East for these companies to operate, I think there's a particularly good job done by the regulators to be extremely transparent, but more importantly, to be very approachable. And that's one of the things, if you're a small firm, you don't have regulatory affairs folks to do all that work for you. You actually reach out to the regulators directly. So they've been very approachable. They've been very transparent. I think there needs to be a little bit of work to see how they can be a bit more regional. So attracting firms in, say, the UAE for regional activity, non-residents accounts or resident accounts, etc. But all the ingredients are there. So it will take a little bit of time. And perhaps when we meet again in a couple of years in exactly this forum, the numbers will be very different.
That's great. And we have some time left, so I really want to give a chance to the audience to direct questions. Bear in mind, he's based in Singapore, so this is probably the only chance you're going to get to see him live. So are there any questions from the audience? Just raise your hands if you have any. We want to take at least one. So whatever you have. No? Nothing?
Are we that clear? Is it?
Was it that fulfilling of a conversation then? All right. No one has any question for you, Anurag. Maybe they can catch you in the Standard Chartered booth just across the room. Thank you all for joining. I hope that was an educational conversation about fintechs and outlook on the industry in the region and abroad. Thank you.
Thank you.